Hi Arjun, this is an official looking letter from the tax authority. You owe this tax right now, and the only giveaway is that it's urgent. The people doing the scamming are basically prisoners under modern slavery. The people being scammed are typically in a G20 country and losing their life savings.
I've seen increasingly resistance among a lot of our clients to say, hey, we just don't want to do this modernization. It opens up us for a lot of risks, and that just clamps down that whole sort of need to innovate.
If you don't think they're a threat, go ask any bank in Ireland if they're a threat, where they have now more than 50% market share. That's coming to wherever you are too. But protecting your customer is not a risky thing to do. Protecting your customer is the right thing to do, and that's where you learn what innovation is, because fundamentally that's what your brand promise is supposed to be.
So, ladies and gentlemen, welcome to today's episode of Couchonomics with Arjun. I've got someone who's very, very famous, let's put it this way. Well, he's famous in my world. He's definitely an inspiration for me, someone I've been following for years. I'm usually sort of first thing in the morning, I look at what Simon posts because it sort of leads to a few thoughts and a lot of reposts from me. Having said that, let me welcome Simon virtually on the show from London. Simon's actually the head of strategy of Sardine. And previously, Simon, correct me, but you were co-founder of 11FS, correct?
That's right, yeah. And before that, head of crypto R&D at Barclays. So I've had a weird journey of career working in banks, consulting to banks, selling into them as a provider, but also now to lots of other fintech businesses as well. So yeah, thanks for having me.
No, pleasure. Okay. So I got some feedback when I finished last season that I don't cover enough of the topics which should get more attention, fraud, scams being one of those. And I spend too much time speaking to founders of BNPL players and other sorts of fintech. So I said, let me correct that. And Simon kindly agreed to come on. Simon, let's just start with, I think it'll be very, very useful in your words to sort of sum up I guess, and I think they were your words, or someone's used these words called Scamdemic, right? Saying that we're living through an era or a period of Scamdemic. Can you help sort of paint a picture? You know, are we sort of now living through sort of some form of a public health crisis? Are we paying enough attention?
Yeah, I've been saying that for a few years. I don't know if I coined it, but I don't remember anybody saying it 2-3 years ago. The reason I coined that is because the growth rate is exponential, and the impact is like nothing sudden. And the financial crime is the only asset class that's growing faster than the NASDAQ. I think only Bitcoin is maybe a little bit ahead of it, and you wonder how much of that is correlated. The problem is it's organized. The problem is it is not only state-sponsored, but highly, highly commercial enterprises that have sophisticated teams in large parts of the world that are having an awful lot of success. The problem was faster payments meant faster fraud. The problem was, as everybody went online during the pandemic, a generation of people who didn't know how to protect themselves was suddenly entering the customer population. And also crypto was booming. So in fake investment scams also boomed. Hello, I'm your broker. I will help you use this new online tool. Oh, you're struggling to use this online tool. Let me just install this little bit of software. I can take over your screen and really help you out to log in. And the brokerages and the fintech companies and the banks just saw that the amount of fraud absolutely skyrocketed. And we are talking about pensioners losing their life savings, but we're also talking about now the compounding effect of generative AI. So the digital shift during the pandemic, a vulnerable population comes in. Generative AI, everybody else is much easier to deep fake or to convince. At the simple level, there's no more Nigerian prince emails in your spam filter anymore when it comes to what scam emails look like. What they look like now is incredibly targeted, incredibly sophisticated, personalized emails. Hi, Arjun. This is an official looking letter from the tax authority. You owe this tax right now. And the only giveaway is that it's urgent. That's the only way you know it's really a scam, because everything else is legitimate and believable. Fake IDs, deepfakes, absolutely convincing. You're probably familiar with the story of a company in Hong Kong that lost $25 million to a scam where some poor financial controller thought they were on the phone with their CFO and 8 of the financial services leadership team, or the finance leadership team, and they were all deepfakes. And this is happening in job interviews. It's happening everywhere. Like, this tool is incredibly cheap. It costs $20 a month, and you can basically defraud anybody. There are tools online that you can just fraud as a service. You can click a button, stick a credit card behind the bar, and it will just go spam people, and you just sit there collecting the funds. And behind this is a network of criminal organizations that have scam call centers in Asia Pacific and in the global south, where they have essentially built giant call centers that look like a business office, but they've got really tall barbed wire, and none of the people inside are ever allowed to leave. So the people doing the scamming are basically prisoners under modern slavery. The people being scammed are typically in a G20 country and losing their life savings. And this is the quietest thing that nobody's paying attention to, but it is also the number one crime in all of the United Kingdom. It dwarfs any other form of crime, and we're not talking about it enough. So that's why I call it the Scamdemic.
And, this is great, right? So you kind of made my life a lot easier. You've given me half a dozen topics, which I'll kind of try and deconstruct with you in the next 35 minutes I have with you, right? Let's start with the obvious question. Fraud, scams, it's highly organized, it's state sponsored. Some of it is getting a lot of attention, I guess, at a national level, right? Where I guess national infrastructure is at risk or national security is at the risk. Are we seeing enough attention being given at the boardroom, right? And even if I narrow it down to the world that I belong to, which is the financial services world, is it getting the necessary amount of attention? If not, why? Is it just lack of education? Is it just the crazy desire to just keep growing? What are the root causes? Sorry, 2-part question. I might be wrong.
I think it depends, right? Honestly, it depends on the country you're in, and it depends on the business model you operate with, right? So my observation of the GCC markets is there's almost like an embarrassment. Like, we don't have fraud. We're very, very secure. Yeah, we all know you do. It's just like, can we bring this conversation up, because it is about securing customers. And with the rollout of real-time payments sweeping across the region now, that becomes a crucial thing. In the United States, it's more of a litigation problem. Well, push payment fraud. If a customer has authorized a transaction under Reg E, then the United States boardrooms, there is a case right now, Citibank versus the Southern District of New York, where they're actively fighting out whether or not the bank should be responsible for repaying that customer. But then it is a top of mind issue wherever you go, whether it's Quiet Part Out Loud, whether it's in the United Kingdom, where there was a dedicated regulation where both the sending and receiving institution are 50-50 liable under the payment services regulation. So there's liability schemes popping up in the UK, Singapore and elsewhere. There are kind of boardroom conversations that are starting to happen that are not loud. And then there are litigation efforts in the United States. But I think all of this it comes back to, what was the cost of fraud historically? The cost of fraud was, we lose a little bit of money. But if we make our fraud controls too tight, we lose more revenue than we lose to fraud. And so there's always been this tension of customer experience versus friction. And a little bit of friction can be a really good thing if it's targeted in the right place at the right time, but too much friction damages your overall revenue. So where do you want to be historically? Somewhere in the middle of the pack. Right, you don't want to have the highest fraud rate, but you don't want to have the lowest fraud rate, because if you're doing that, you're probably leaving a lot of revenue on the table. That's been the psychology. I think data and AI changes that, but the conversation has started to change as liability mechanisms are coming in, but also as the headlines are hitting major press articles of, as soon as you've got headline risk, you've got the boardroom paying attention. And I think that started to happen last year. So for 2025 and especially into 26, what I'm seeing in the boardroom is this is now, if not the top issue, then it's 1, 2, or 3. It's in there for the conversation. Finally,
that's good to hear. That's good to hear. But let me just pop this question out. Is this now going to become an excuse? And by no means am I undermining the implication of, as you said, headline risks, right? Because headline risks are in a lot of ways unquantifiable. It's not a metric that you can sort of factor into, our next credit policy. Is this going to become an excuse for not doing lots of things now? Because I wear another hat, which is my consulting hat, and I've seen increasingly resistance among a lot of our clients to say, hey, we just don't want to do this modernization. It opens up us for a lot of risks. And obviously they can shout quite loud, and that just clamps down that whole sort of need to innovate, move forward, right?
Yeah.
Are we seeing a little bit of that, or we're not?
Again, it depends. So if I think about the neobanks that are the ones that are going to take all of your customers as a financial institution and take all of your revenue, certainly your revenue growth, then they are aggressively trying to build defenses on the customer experience side. So what I found fascinating was that Revolut, who are getting licenses in the GCC, who are dominant across Europe and now expanding into Latin America with over 50 million customers. If you don't think they're a threat, go ask any bank in Ireland if they're a threat, where they have now more than 50% market share. That's coming to wherever you are too. What they've done is when their AI believes that the customer is about to be scammed, so the customer is starting to make a large payment to an account that looks really risky, they're hesitating, they're sort of changed how they've used the device, or they've installed some weird app or some weird software. If Revolut has any of those early warning signals, then what they'll do is they'll make the customer wait for 24 hours. They'll make the customer watch a scam awareness video. They'll make the customer call them, but they can only call them through the Revolut mobile app, not out of bounds, because there are so many people calling them that claim to be from their bank. And so it's these features that are seen as a customer safety advantage. It's these organizations that are growing revenue, taking market share, that are absolutely leaning into solving this problem. And it's that which is the capital that I think incumbent banks believe they have, customer trust, which is shifting. Customer trust. If I'm playing esports, if I am under 40, then trust is a fundamentally different question than it is for a 60-year-old. And if you look at the wealth transition, the generational shift of wealth that's coming, as I think about my P&L and I look at my revenue at risk and I look at my operating costs, I would start to say that I'm failing in my fiduciary duty as a board member, as an executive, to not take this fraud issue and this trust issue seriously. And I could punt the transformation question all day long. And maybe replacing like an open heart surgery is a very risky thing to do. But protecting your customer is not a risky thing to do. Protecting your customer is the right thing to do. And that's where you learn what innovation is, because fundamentally, that's what your brand promise is supposed to be.
So if I sum up what you're trying to say in my simple words, don't shut her down. Invest in what you can to build your defenses. Otherwise, someone's going to come and take your lunch away. And I think that's kind of the message which most banks need to wake up to, at least in our part of the world. Because the truth is, the new banks and the fintechs have really not taken anyone's lunch away here yet.
Not yet.
Yeah, not yet. But it's a question of time. It's when rather than whether or not. That's also a great segue, because I should ask, it might be great for you to introduce what Sardine's all about, a bit of about Sardine's genesis. What is it that you guys are doing? And I guess let the audience know about the company.
Yeah, so Sardine is a AI-powered platform for everything in financial crime. So financial crime can be cybersecurity risk, it can be fraud risk, and it can also be anti-money laundering. And so it's that entire spectrum. So you would historically have somebody like a Verifin or a Nice Actimize doing financial crime. You might have a bunch of fraud systems, whether they're in-house or they're from Sift or Riskified or Forta. You might also have a bunch of point solutions that sit on the front end as well, that solve bits of the problems. Companies like BioCatch, companies like ThreatMetrix, LexisNexis, Moody's, When I say Sardine is an AI-powered platform, I mean it is a platform. It does all of those things. We have a number of proprietary capabilities that make us really unique. Aside from being a platform that wraps all those things together, we've built our own device intelligence and behavior biometrics. So what does that mean? Customer is using a laptop, customer is using a mobile phone, and we can tell if that's the same customer. Are they typing, tapping, using the device in the same way? Are they sort of is the phone upside down? Because if the phone's upside down, chances are it's in a mobile server farm somewhere. Is the phone moving in tiny micro ways? Because that's what a human would do when they tap it. But if it's not, then it's sitting in a server farm somewhere else. Is there a VPN or proxy on this device that's trying to hide its location? You think it's in Dubai, but it's actually in Nigeria. And piercing that stuff is what the Sardine is world leading and world class at. But the other thing we build is all of the AI that sits around that. So it's one thing to give you that information. It's another thing to say, here's what that information means. Hang on a minute. This customer login has now suddenly started coming from Myanmar, and it wasn't historically coming from Myanmar. It was coming from Dubai. And it's pretty far away from their address. So maybe we should try and step up this customer. Let's ask them for some more authentication. So that's sort of the signals that we throw off, but the decisioning that sits around it. So we let people see the information from the device and behavior, but we also pull it in from third parties. So has the telco or the email or anything else changed? So we have third-party data. We pull stuff in from all of your Moody's, your GAIACs, Experian, everybody else. And we build this comprehensive view around a customer from every time they try and onboard to every login to every payment. We are always watching for any new risk, whether that risk is fraud or whether that risk is money mule activity, financial crime, or anything of the sort. So we become that comprehensive platform. And then if you're on the financial crime side, we also have the ability to do transaction monitoring. So this transaction has happened. Is it suspicious activity? We can do case management. Does somebody need to go in and investigate this? And we can then also file that with regulatory authorities, your local and international regulators. OFAC compliance, PEPs, sanctions, adverse media, all of that stuff from KYC to transaction monitoring and everything in between. And there aren't a lot of people that are building new complete tools. A lot of the ones that sit inside banks will probably sit there for a long time. But what we generally find is when you're dealing with real-time payments, you need this is really, really risky. Perhaps Sardine can just help us with this piece. And we do a lot of that for banks today. We do a lot of that early warning sign of scams. We do a lot of real-time transaction monitoring. So they might have an existing transaction monitoring system, an existing case management system, but they're not real-time, they're batch. But if you're allowing real-time transactions to happen, you're potentially allowing the proceeds of crime to be washed through you as a financial institution and taking on massive regulatory risk without realizing that it's happening or without having the tools to be able to push back. So we try and find a bunch of ways to support financial institutions and fintech companies as well. Some of our biggest customers are fintech companies, Ramp, Brex, and many others along those lines. We also have crypto exchanges, but we also have large financial institutions. So we do a lot.
I get that. So here's an interesting question. You work across multiple jurisdictions, right?
Correct. Yeah.
And
we're strongest in North America. We have clients across the EMEA region. We have clients in Japan. We have some in Hong Kong. We have some in Singapore. we're coming to the GCC. We should be announcing our first live clients in the UAE, I think this month. And we're finding it very, very active market for us.
No, and I would expect it to. So tell me, does the fraud typology change across these markets?
No.
Okay. So very similar.
It's the wildest thing. Fraud is fraud. Fraud is as old as money. And in fact, the scams are very similar, because the problem with the Scamdemic is the fraudsters are in the same place. The ones attacking Japan are the same ones attacking Singapore, are the same ones attacking Dubai, are the same ones attacking the United Kingdom, the US, and elsewhere. So the attacks come from the same places and they go to the same places, which really, from a Sardine perspective, means the problem we solve is a somewhat universal problem.
Well, and that's great news, because otherwise, you have this constant challenge of saying, I need to adjust myself again and again and again. And
what I would say is every institution is different. Mm-hmm. Every institution has a different typology. If I'm a brokerage, I have a very different problem to a marketplace, to a, sort of a neobank to or whatever. The types of problems you have are the same. But what we've done now is we've enough clients with those profiles. We've got these sort of custom pre-built rule sets and machine learning models that are trained around that type of client. But they're going to see nuances and they're going to have different risk appetites. So what we try and make sure of is that we don't say, it's one size fits nobody. We say, like, customize it. Oh, and that's not going to be a project. It's not going to take you 6 months. It's not really going to cost you anything else. You can just have a nice little dashboard. And if you want to change something, you can just push buttons and change it. Like, actually, our risk appetite has changed. This number needs to go from 95 to 96. Go into Sardine, beep, boop, boop. Risk appetite changed. It's live. It's in production instantly. You're not waiting for months. There's no big project. There's no overhead. You can actually do things, but you can do it with enterprise grade security.
Okay, interesting. You mentioned real-time payments a few times. So let me sort of dig in a little bit further, right? So I guess cat's out of the bag. The world's moving towards real-time payments. We've got India, you've got PIX, you've got even the US is hurtling down that sort of way. T+0 also means, I guess, immediate fraud spikes, right? Two questions for you. Are frauds growing faster than real-time payments? And within real-time payments, right? And what does that sort of mean? Like, so where do we go from here? Right? Because I guess people are going to adopt real-time payments for all the right reasons, if I may use that term. As you said, fraud becomes that much more real, that much more harder to control, because the friction is being taken out of the system, which would, give us that sort of healthy friction. I think you said it, or I'm happy to add that word. Where do we go in terms of sorting out fraud in real-time payments if it's going to continue growing?
I think every country will do something slightly different, but every country will get the joke and respond to it, just as we did with the pandemic. It may be a little bit too late, but we will eventually take action. And every market will do it differently. If you look at the reactions of every country, it sort of mirrors their national culture. The cultures that were more top-down and authoritarian went for a top-down authoritarian approach to managing the pandemic. The cultures that were a little bit more federal and a little bit more kind of free market for ideas had a free market of ideas of how you deal with it. And that's sort of playing out already, right? I think the visibility of the problem is different in different markets, and the pain level is different. I think the sort of G20 markets historically are the ones that are feeling the pain the most, but there's an awful lot of wealthy individuals in the GCC who are probably calling their private bankers going, oh my God, it's gone. Where's it gone? Where's my net worth gone? And that is the kind of reputation that can sour very, very quickly. And we should mention as well, this is not just a consumer problem. Far, far from it. Business email compromise and the scale of attacks on businesses is absolutely massive. So if your corporates have suddenly had a scam for $25 million, you're going to eat that because that customer's too hard to lose. Oh, by the way, that $25 million probably went to a very professional criminal enterprise. So you better report that pretty quickly and start an investigation, because you don't want to be. I saw Worldline are in the headlines recently because it looks like a small team they may have covered up some fraud risk. You absolutely have to be transparent about this stuff, and I think sunlight is the best disinfectant here. And I think we will see a response. We already are seeing a response, fortunately. But what we need to do is develop this set of best practices, which Sardine is working on with many other ecosystem partners, and just share information of how we push back. There's a lot of things that information dissemination. The fraudsters talk to each other. The people trying to catch it don't really do a good job of talking to each other. So let's start the conversation about what does good prevention in real-time payments look like. I think that's where we're starting to head.
So are we at risk? And Simon, I'm just talking about what I've heard is there risk that, the regulators clamp down and just kind of transfer the risk from one entity to another? Banks are being sort of forced to, at least in the UK, I hear that, a reimbursement of app fraud is being moved into the banks. I think we're hearing similar things come out of the US. Does that start to change fraud because these more sophisticated organizations can invest in fraud tools better? Or are we just kind of moving the problem, moving the buck without actually solving the problem?
It's a pincushion. You squish down on one side and then another side pops up. So no, what you've done is you've just created a fund for the fraudsters so the victim doesn't feel the pain, and the fraudster can get away with it. Like, all you've done is created a funding ecosystem. Sure, the victim harm is kind of lessened, but if there's less victims screaming because they got refunded, the fraudsters now can get away with it. And now you've got an almighty financial crime issue because the fraudsters just have even more incentive. So reimbursement is not a solution to the scamdemic. It is fuel on the fire. And I think the financial institutions in the UK and elsewhere, and in the US, have a point that actually 60 to 70% of these scams originate on social media. That's where they begin. A lot of this is fake websites and ads that come through, search engines and whatever else.
Tell me about it. I have 2 daughters.
Right?
Yep.
How many Telegram and SMS messages are they getting about, would you like some free work? Because that free work is often money mule activity. And certainly, in the UK and elsewhere, we have a cost of living crisis. We suddenly have people in the G20 who would really like a bit of work. They really would like a bit of extra cash. And what they're doing is unwittingly becoming money mules. So they're receiving a bit of money and moving it somewhere else, or they're sending out some spam emails, but what looks to them like it might be for a legitimate business, and they are contributing to crime. So yeah, it's going to be.
But doesn't this problem then get compounded? Because I think you just mentioned a few moments ago that a lot of the companies will just kind of swallow the corporate crime, right? Because the customer is not to be, they can't afford to lose the customer. Isn't that phenomena then, there's this sort of funding phenomena going to get 10x? Because in the corporate world, you have more and more corporates saying, we'll just take the losses, right? Which are fraud related. Is that a massive, massive concern?
It's a massive concern. And it's one where we have it on the cybersecurity side as well, where people just pay the ransom sometimes.
Yeah.
And so like the existential risk, like, we are not solving the problem here. Like, this is just getting worse, and we're just kicking the can down the road by paying the bill to the criminal. And we're not solving it. And the only way to solve it is to really push back and coordinate. And we keep creating these like funding models for crime rather than solving crime. It's just really weird, isn't it? And that's why I call it a scamdemic. We're just trying to hide it. Just hide it enough so that enough people don't feel the pain and the crime can kind of continue. And maybe we should do something about it. Maybe we should coordinate. Maybe we should share our best practices. Maybe we should start to share data. Maybe we should implement better AI tools. Maybe we should get on the front foot with trust again. Because fundamentally, the promise a bank made was your money is safe. And the role they play in society, as well as to keep the bad actors at bay, will never keep all of them out all the time. There's always going to be cracks in the system. But we've kind of taken this much more, it's hard to solve. Let's just reimburse people. And we seem to be making the problem worse. So yeah, I think we have reimbursement is not the thing here. We need cross-sector collaboration desperately, and there's no real forum for that, and that's something I'm quite keen to create.
But Sam, just let me be stupid for a minute, and you can correct me here. Is there a lost opportunity with all this stuff going around open banking, open finance, which, if I was to just dumb it all down, is about the ability to share data in a smart manner? Shouldn't this be a use case right up there among the banks?
Yeah.
Right.
So something we do at Sardine quite a lot is before it works pretty well in the United States. It works okay in the UK, which is before you go and send a transaction to a third party. So if you're a Sardine customer, let's say you're a bank or a neobank, and your customer is trying to send money to another account, we'll use open banking to check that account and pull everything we can about it from the account if that's available. The problem is there's only so much we can pull because that customer on the other side hasn't consented to it. So what we've built around that is something called Sonar. And Sonar is a model where the financial institutions can actually collaborate directly and say, hey, I'm the sending financial institution, receiving financial institution. Could you let me know everything you know about this account? Because I'm worried it might be fraud. And then let me run that through my fraud systems and maybe deny this push payment from happening in the first place. So we are building those capabilities in. The UK has something called confirmation of payee, which is a bit meh, which, you sort of have to confirm the name of the payee. Mm-hmm. So fraudster's just going to trick you. That's my name.
We have the same stuff here.
My name is John Smith. Like, send me the money. I know it says Simon, but it's really John Smith. Don't worry about that. So that doesn't really solve it. But in most open banking systems, so in the UK, we have something called TRI, Transaction Risk Indicator. Okay. The problem with the Transaction Risk Indicator, if you are going to instruct a payment, an account-to-account real-time payment, is it's an optional flag. And whenever a bank has an optional bit of data that they don't have to send, they don't send it. And we could solve this problem with infrastructure that already exists, that you are regulated to have the APIs for. You just don't send that one little bit of data. I mean, I know it's sometimes hard to change your legacy systems, but you're sending one bit of data, bit of data that you already have through an API that you already have. And I know you're going to need program management and budget sign-offs and approvals, and it's going to be like trying to run that through the committees. Like, even though the technical change is probably the easiest technical change you will ever do, I know there's like a 99.9% of it is getting everybody to agree to do it. But if you can't agree to do something to protect your customer, then what are you doing your job for?
Well, I'm gonna propose a dumb idea. I think we've had credit bureaus, which are utilities in all intensive purposes. I think we should have some sort of a fraud utility, and yes, it'll introduce a little bit of friction from real time. We might become near real time, but I think the net gain is still there, right? I think we don't need a payment in a second. We can wait 5, right? I'm assuming.
And to be fair, the experience, the Equifax do a little bit of this on the national level. There's early warning services in the United States that does it on a national level, but they're all sort of crowded, closed loops, right? Yeah, and they do a good job. But what we're proposing with Sonar is something that's initially US domestic focused, but available to anybody. And I think that sort of member get member type of approach and a bit more multilateral is kind of really, really key. And generally, it's if you work in the fraud and compliance space for a long time, everybody will bring up that we need to do more data sharing. It's kind of a meme that everybody will bring it up. But to your point, I think that functional utility and standing that up and making sure that that exists and it is available and it is modern is a responsibility that, again, it's kind of doing the hard thing everybody says they should do. Sometimes it's a case of just going and doing it. Like, I'm talking to you from my gym. I have to go every single day. It's a case of just going. I don't want to go, but I'm just going to go. We transforming internally, don't want to do it. But, there are some stuff where it's not open heart surgery. It's just showing up. This is just showing up. We got to do it.
No, got it. Simon, I know I've got 8-9 minutes with you. I've got 3 questions quickly to cover with you, and I do want to hear your view. So let's talk a little bit about digital assets and stablecoins, right? So this whole new world is opening up, right? I guess, I want to use the fraud moment, right? There is a certain sort of settlement finality, right, to do with sort of adoption of digital assets. It's on chain, it's irreversible, right? Where do you see fraud shifting with this sort of new class of I guess, or new class of payments, or new class of finance, which is sort of coming into the world?
Yeah, the instant 24/7 global is great if you are in corporate treasury and you are trying to move dollars around the world. Absolutely incredible. Especially for exotic currencies, where trying to get in and out of those stocks of currency that we're building up was huge. I am bullish on stablecoins. I think they'll be extremely useful.
Yep.
But there's an elephant in the room called Tether and Tron, and that has been massive for financial inclusion in some parts of the world. It's also been a really useful way for some of these criminal networks, frankly, to move. And a lot of them aren't on OFAC lists. It's not like Tether is breaking any particular law. It's just that there is, it's open and it's decentralized. So there's nobody that's managing the control and the risk. So this bottom up currency, I mean, frankly, the US dollar bill used to play this role before Tether did. So I'm not trying to single them out as a negative thing, because the US dollar bill also did a lot for financial inclusion, and that was 95% of its use. But that means that if that stablecoin ever hits you as a financial institution, then you potentially have this source of funds check that you can do to be like, oh, hang on a minute here. I'm not sure if I want to accept this in. And the crypto world has actually done a really good job of building data sharing. Ironically, the only place data sharing really exists that's very good is in crypto networks. And crypto exchanges. So there's something called IVMS 101 that came out of the V20 in Osaka from the Financial Action Task Force. Okay. That was a lot of words I threw at you. But essentially, it is a mechanism for centralized exchanges to share information. So let's say some decentralized wallet that's the same as cash has been transacting, and then it shows up at Binance. And then from Binance, it tries to go to Coinbase. Binance and Coinbase can talk to each other and go, here's what I know about this account, here's what I know about this wallet. They can actually do that so that they can fully comply with national and international regulations and laws. So we have the tools. What we don't have is sophistication in everybody else. So the crypto exchanges have now become quite sophisticated, but everybody else, they say fools rush in. There's a stablecoin gold rush, and everybody's trying to adopt it. Everybody needs a story. Everybody's getting a headline on stablecoins. I'm talking to a large investment bank and its investor community this afternoon. Every public investor wants to know about stablecoins and what it means for their portfolio. It is now moving stock prices, so everybody needs to announce some sort of initiative. That's dangerous. I mean, okay, announce the initiative, but if you're building stuff in this space and you don't understand that risk, then it's potentially quite challenging. I would say to you, what you need is some solution that sees both on-chain and off-chain risk as one coherent risk set. And I should mention that Sardine's founder, Soups Ranjan, built the fraud and fin crime stack at Coinbase. He fundamentally had to understand off-chain and on-chain and put those together. And Coinbase is still one of Sardine's biggest customers. That is a superpower when you can see on-chain and off-chain, because you can genuinely protect your customers on both sides of the ledger in a way that investment scam suddenly becomes a lot easier to spot before it's coming.
Got it. Thanks a lot. AI. Foe or friend in this? Well, who's winning?
Well, I mean, the fraudsters are winning. There's no question, because they don't have to get procurement sign-off to use OpenAI Enterprise. It's a simple. They're not worried about data sovereignty. They just don't have the worries that you do, so they've adopted it. Oh, and by the way, if you are using Copilot from Microsoft, that is not generative AI. It's Microsoft Clippy. Love you, Microsoft, but most people don't know how to use what that product can do. GitHub Copilot is nowhere near as good as Cursor. I love you, Microsoft, but it's not. And the experiential difference of using AI products that you would be able to use as a consumer if you just paid the $20 and what you will experience in the enterprise is night and day. It's BlackBerry iPhone moment, like times 100. There was this moment, you'll remember it, I'm sure. I remember it very well, where the executive was not going to give up their BlackBerry because it was the serious business machine and the iPhone was a toy. Mm-hmm. They say it always starts out looking like a toy. If you, as an executive, as a leader, have not really paid for these products, and I'm not talking just about ChatGPT, I'm talking about Claude, I'm talking about Granola, I'm talking about 11 Labs, I'm talking about Midjourney. Like, you have to go deeper and understand this stuff because it can be your friend. It can be genuinely transformational. So one of the things we focused at Sardine is building agents, because I think enterprise knows how to buy an agent. They don't know how to buy generative AI. But executive, you should still go use generative AI. But an AI agent feels like somebody I hire. I hire human agents. I hire an AI agent. We published a white paper called the Agentic Oversight Framework for how you oversee AI agents. Because you know how you oversee humans. You have an HR policy. What is your HR policy for AI agents? And that's the Agentic Oversight Framework. We've built that and we've given it away for free. We've also built a bunch of AI agents that can do financial crime tasks, like investigating a case, like doing step-up KYC, like investigating a sanctions alert. We've built those AI agents and we've made them as great. So it can be your friend. I think the realistic thing you can do right now is take that point solution from a Sardine, from a somewhere else, for your call center, from Sierra or something like that. Don't please buy it from incumbents trying to repackage it. Please don't do that. Please don't do it. There are point solutions out there that can make meaningful difference to you now, that don't require open heart surgery, that are really just displacing manual tasks. Go do that. That's the no-brainer. And then figure out generative AI in your own time, on your own devices. But stay safe.
Last question, Simon. Is financial crime going to get a lot worse and lot painful before it gets better?
Yes.
So how bad is it going to get?
You won't notice, because to you, the rest of your life will continue unless it's all you can notice. Because when it's too late, it's existential. When it's too late, some relative or family member or you have lost everything, or your business has lost everything.
So then why does it get better then? But then why does it get better at all?
Because it's not happened to enough people yet. And I think we also create these coping mechanisms. We refund somebody.
I know we're out of time. Thanks a lot for making it. Are we seeing you in the Middle East anytime soon?
Yes, I'm coming to Money 2020 Middle East, so I will absolutely be there. I think I've got a keynote on AI and fraud, so you come see that if you're coming out.
I'll definitely be there. I definitely will be participating too in some form of shape. But thanks a lot for making time. Have a good day, and let's stay in touch.
Thanks for having me on Couchnomics. Take care.
Take care. Bye-bye.